What's up, guys? It's Nathan here. As the Reserve Bank of Australia contemplates further rate hikes in interest rates to combat inflation, the Australian Tax Office has landlords and property owners in its sights for this tax season, as well as the Labor Party emphasising its plans on the housing market with several new initiatives. These several developments have implications for the Australian economy and broader landscape at large, and that's exactly what we're going to dive in today. Let's start off on the top, looking at the perspective for rates to go higher, which is looming larger. The Reserve Bank surprised many in May with their 25 basis point increase, and this move, coupled with an indication for potentially more rate hikes, suggests that additional monetary policy tightening may be necessary to bring inflation back in track within a more reasonable time frame. Now, the Reserve Bank's preferred inflation metric, the trimmed mean, declined marginally despite a substantial drop in the headline inflation rate in Q1, which was down from 7.8% to 7%. While this decrease signals a hopeful peak inflation, the slow rate of decline is still of concern. Services inflation is a global concern, with Australia being no exception. Despite goods inflation plateauing in the initial supply chain issues and raw material costs, services inflation is escalating and not yet peaked. Rental inflation is also becoming prominent. Recent data suggests that significant surges in rent are contributing to the overall inflationary data. The Reserve Bank of Australia may need to rise the cash rate as early as next month if upcoming wages data exceeds expectation. This move comes amid concerns over weak productivity, potentially leading to entrenched high inflation. The release of the Reserve Bank's May board minute meetings revealed that the board believed that they might need to push the cash rate beyond the current 3.8% to control inflation. Market analysts are predicting there's a 58% probability of a rate rise in August, which is a significant rise from the 34% chance estimated previously. And if you find value in this video, please consider hitting that subscribe button, as it really does help out the channel. And a big thank you to all our subscribers for your support. It inspires us to create more content we hope you enjoy. The discussion from the Reserve Bank has shifted from whether inflation has peaked to whether it's decreasing rapidly enough. We might see the Reserve Bank lose patience and aim for inflation to come down sooner. However, the Reserve Bank hasn't forecast that inflation will hit its top of its range between the 2 to 3% target band until mid-2025. This slow pace is viewed as a necessity to maintain the employment gains made during the pandemic. In addition, the Fair Work Commission's decision on the minimum wage expected by June could also influence the near-term outlook for interest rates. The Reserve Bank surprised economists early this month by increasing the official cash rate to 3.8% due to concerns about services inflation and weaker labor productivity. High productivity growth would allow the economy to expand faster without causing inflationary issues. And this is also a primary driver around real wage growth in the long term. The Reserve Bank board also noted several factors that might explain for weaker productivity outcomes, including COVID-19 disruptions and slow growth in employment in government-funded services. Given the Reserve Bank stated the willingness for further rate rises, the present global uncertainty and financial system turbulence might not be significant enough for them to halt plans for the rate rises. Given problems of domestic inflation and potential currency vulnerability, the Reserve Bank may need to raise rates, signaling further rate hikes are on the horizon. Let's move on to see what the ATO is doing this tax season, particularly if you're a property owner who rents out a space or uses Airbnb. The Australian Tax Office has turned up the heat on this tax season, particularly on deductions. The ATO is cracking down on landlords who go overboard with their tax deductions. This comes after a review revealed that nearly 90% of landlords were inaccurately reporting expenses in their annual returns. The spotlight is also on those who failed to declare income on short-term rentals like Airbnb and stays, and who overstate their work-related expenses. In addition, $89 million was recently allocated to the ATO in last week's budget to strengthen its scrutiny. This extra funding is predicted to increase the agency's receipts by about $475 million over the next 5 years. The ATO Assistant Commissioner Tim Lowe reported that 87% of individual landlords use a tax agent for their income tax returns. He urged these agents and landlords to prepare their own tax more diligently. The ATO commonly finds that landlords are forgetting to declare income and are making incorrect property deductions. These often include overstated expenses or claims made on personal property improvements. He further explained that you can claim interest on a loan used for the purchase of a rental property for generating rental income. If the loan covers a personal expense like a new car or a vacation, only the interest deduction related to generating your income can be claimed. In this digital age, cryptocurrencies are also gaining popularity. The ATO stressed that the importance of keeping accurate records of income producing periods and the portion of the property used to earn income to calculate capital gains accurately. Keeping this in mind, if you do rent out your home through Airbnb, capital gains tax may also apply. Lowe goes on explaining that usually the main residence is exempt from capital gains tax. However, if you're using your home to generate income, for instance, renting out all or part of your property through the shared economy or running a business from it, then capital gains may apply. The ATO has also flagged excessive and incorrect work-related expenses, urging taxpayers not to blindly replicate the previous year's claims. This year, the ATO is committed to ensuring taxpayers understand the changes to the working from home methods and can validate their claims accordingly, Lowe says. And lastly, the 2023-2024 budget places more emphasis on several new housing initiatives. The budget promises more housing supply from 2024 and the ongoing home guarantee scheme, which we've talked about in previous videos. It also introduces changes to the Commonwealth rent assistance, incentives for build-to-rent development, increased community house funding, and additional resources for states to combat homelessness. Renters receive some recognition in the budget, but it may not be significant relief for low-income households in private rental markets. And remember to like, share, and subscribe to stay informed with all things property and finance. The budget also extends eligibility for low deposit home loan schemes to non-first home buyers who haven't owned a property for at least 10 years. Single legal guardians of dependents and permanent residents will also now be eligible for the home guarantee scheme, which previously wasn't the case. We've done a video on this and explained the full criteria that's starting on July 1. I'll leave a link below that you can check out. Did you know here at Hunter Galloway, we get mortgages approved? So if you need assistance with finance, we can help. Call us on 1300 088 065 or visit our website huntergalloway.com.au, where we'd love to help. And best of all, there's no cost for our service. Leave a comment below, guys. Tell us what you think. And as always, thanks for watching. We'll see you next time.